Hi guys, I hope you all are well. This is Almeida from Forex Trading No Instagram Gurus, and today I'm gonna talk to you about a tool that you're gotta have. And when I mean you're gotta have, it means you're gotta have activated every time you consult any financial market. Any ideas? Wanna know what that is? Stay tuned until the end. Here we go! Guys, thank you for your time. This channel is dedicated to save you from all of those Instagram spoiled brats pretending to be millionaire Forex quote-unquote gurus, flexing with their rented cars and their rented mansions, ready to empty your pockets with their $500, $1,000, $2,000 fake trainings or worst. They are the reason why 95% of all traders fail, and you and I have a mission to stop them. Like, subscribe, and share this so more people get the good news. Now, some actual financial markets related knowledge. Okay, as I mentioned earlier, there's an unskippable tool that you need to check the market, and it breaks my soul that most quote-unquote trading YouTubers out there and trading blogs and websites try to tell you how to make money trading without even mentioning this tool. There are so many quote-unquote strategies out there without this that it is no surprise that most traders fail. You know what I'm talking about? I'm talking, of course, about the long-term trend indicator. A long-term trend indicator is more relevant than any other indicator that your trading algorithm might have, and the lack of it while trading is the reason why most new traders fail. Why is it relevant? Well, because of relevance. One of the main issues I have found about trading knowledge out there is that most educators, most mentors, most professors are not using precise language to describe things. And one of the forms in which this is visible is in the lack of precision while talking about trading with the trend. Okay, we got it. Follow the direction of the trend. And here is where relevance comes into play. You'll see there are three main kinds of trends. I'm not talking about kinds of markets, I'm talking about kinds of trends. And these three main kinds of trends are short-term trend, middle-term trend, and long-term trend. As you can see in my videos, I use a dichotomy of colors, red representing wrong and blue representing good. Not right, good. Then why are the short and the middle term trends in red and the long term trend in blue? Well, because of relevance. The most used indicator to project trends on a chart is a variation of a moving average, and there are many kinds. For those who don't know, a moving average is a line that shows an average price of a financial asset on a chart. That's it. Here we see what is considered a short-term trend indicator, the 9 periods simple moving average. The 9 SMA typically takes the last 9 closing prices of the last 9 candles and creates an average of them in a continuum, thus creating a line. The 9 SMA appears in thousands and thousands of quote-unquote trainings out there, especially scalping trainings. And the problem with it is that it creates an enormous amount of false signals, and a lot of false signals equals a lot of lost funds in your account. Check this out. This arrow signal is a moving average crossover signal, and what it does is that it triggers a warning every time two moving averages cross. In this case, I set a crossover of the 9 periods SMA with the 1 period SMA, the 1 period SMA representing the candles themselves. With this, I modified a moving average crossover signal and turned it into a candle moving average crossover signal. Nice, right? And it was so simple. And this is the result. Every arrow is a signal for you to enter the market in the direction of that arrow. As you can see, there are false signals all over the place. So a short-term trend is not the relevant trend of a market, at least not most of the time. And I'm gonna talk about this in a future video. And what about a middle-term trend? Well, the 50 periods simple moving average will do it. The 50 SMA is widely used even by true professional traders as an indication of what the middle-term trend is. That's why I'm using it in this example. Now, you can check for yourself that more substantial trends appear using the 50 SMA, but when you add the visual aids, well, and this is why I love visual aids on the charts. They give me context of what is happening, a context that you won't find just looking at the candles, a context you will find in my videos. So like, subscribe and share if you find these visual aids valuable. I have many different kinds. Once we have the arrows on chart, we again see that although there are less signals, many false signals are still projected in the chart, making the middle term trend not the relevant trend in the market. But what if we try a different middle term trend indicator? There are, for example, indicators based on volume or volatility, like the famous Bollinger Bands. Now, the Bollinger Bands are typically made out of a simple moving average and the standard deviation lines above and below reflecting the volatility of that given simple moving average. The default setup is a 20 periods SMA at 2 standard deviations. A popular way to trade with the Bollinger Bands, but not the best, is to open a trade every time the candles reach the opposite standard deviation line, reflecting that the market price is shifting from one direction to the opposite one, whether it is from bullish to bearish or from bearish to bullish. And here's also a cleaner visual aid. This is a Bollinger Bands reverse indicator. Let's remove the original bands to check the result signals. As you can see, apart from these signals, there is also abundance of false signals that are going to drain your account funds if you trade based on them. Most false signals happen in moments of consolidation of a market, periods of time in which the price remains within a narrow price frame, and this is where the long-term trend becomes relevant. This is the 200 periods simple moving average. The 200 SMA is the main, if not the only, long-term trend indicator used by basically all true professional traders, trader investors, fund managers, and the like. You know, the guys on suit and tie? Not the Instagram fake millionaires, many of whom are already heading to prison for their scams or publicly revealed as frauds, but actual professional traders in actual professional trading rooms. The reason why they use it is because the 200 periods moving average wipes out most of signals. As you can see, most arrow signals are gone, and now you have a true relevant trend, a trend that you can ride with fewer possibilities to enter the market in the wrong direction. This is relevant because short-term and middle-term trends will prompt you to open trades in the opposite direction of a relevant trend. And when educators and mentors tell you to trade in the direction of a trend, they mean the relevant trend. And most of the time, the relevant trend, the one that's most profitable, is the long-term trend. Another reason why you should always trade considering a long-term trend indicator is because of the mentioned periods of consolidation. Using a short-term trend indicator, it shows a lot of false signals. With a middle-term trend indicator, it happens the same. But with a long-term trend on chart, you are quite likely to just jump over them without they becoming a headache for you. Less stress, more money remains on your account. As you can see in this chart, I'm using my proprietary dual color candle setup that gives us the general direction of a relevant trend more accurately than using the professional 200 period simple moving average. This candle setup is part of my personal trading system and the one you see in my personal trades reveal at the end of all of my videos. If you would like to know more about my trading algorithm, feel free to check out my ebook series directly at Amazon. It starts only at 99 cents. Directly on Amazon. Links are in the description below. My final advice to newbies in the financial markets, people committing to learn proper trading skills and techniques, and to the general trading community is that you should unfollow and even block any financial market advisor or Forex advisor, quote unquote, teaching you trading strategies that don't consider a long-term trend indicator. As you have learned here, and you can double check on your charts, short and middle term trends produce abundance of false signals, and there is no way to deny it. So that's it. People, quote unquote, teaching you how to make money on Forex or stocks or whatever without a long-term trend indicator are fake gurus. Just keep yourself away from them, and welcome all of those educators and mentors who teach you trading considering a necessary relevant trend. And we got to the closing of this video and I show you my current open trades. Like, subscribe and hit the notifications icon to check them as soon as I upload every video. As usual, quick disclaimer, this is provided for educational purposes only. It does not constitute financial advice and you are fully responsible for the management of your assets while trading. At the moment I have only one open trade. I'm currently short on the pound yen pair, 159 pips positive already, and I have my mandatory stop loss level right behind my custom trend line, securing around 100 pips of that trade. You have the right to move your stop loss to break even quickly and even further, and you have the right to re-enter the market if the conditions continue to be the same. Let nobody tell you that you cannot. When you read and research the market wizards in the history of trading, you will find that they are quick to exit their losing positions and quickly move their negative stop loss levels to break even or positive levels. They know if there's a correction in the market but conditions remain equal, they can re-enter later and avoid losing funds. If you would like to know more about my trading algorithm, feel free to check out my ebook series at Amazon. It starts only at 99 cents. Links are below. That's it for now. If you found this content valuable and you agree that we need to reduce the Instagram gurus' damage in the trading community, like, subscribe and share. Spread the word. Thank you for your time. See you in the next one. Bye.